indication of the beginning of the end, but I do think markets don't like uncertainty.
The U.S. financial industry has an unrivaled record of creating wealth. But while its success has lifted many up, it's also left many out.
The principal driver for these inequities are structural. The most notable is structural racism.
Minorities have found prosperity blocked by restrictive policies and outright violence. Women have been underpaid at every level and excluded from leadership roles.
Women have been disadvantaged, women of color even more so.
People will say, oh, I don't have any people of color. I don't have women because I can't find any. It is not a supply issue. It is not a supply issue. It is not a supply issue.
Business and finance are starting to take action to reduce inequality.
What I want to be able to demonstrate is a high-performing, diverse team can deliver better business outcomes.
But solutions are still elusive.
We have begun to see changes in who gets the money or who gets access.
So there's definite momentum and there is growth as well, but a lot more needs to be done.
The world of capital is in the middle of a culture change. Will it rise to meet the moment?
Join us for Money and Equality, a Bloomberg special report.
Welcome to Money and Equality. I'm Shonali Bassick.
And I'm Romaine Bostick. We're going to focus on the U.S. financial industry and how it's responding to racial and gender inequality, a deep-rooted problem in society that's causing detrimental effects across the economy.
Let's start with a look at some of the economic gaps faced by Black Americans and women that have grown even more alarming over time. In the late 1960s, the average white family had 5 times the wealth of an average Black family in the U.S. By 2019, that gap grew 7 to 1. Today, Black Americans hold less than 4% of the $116 trillion in U.S. wealth, with homeownership accounting for a lot of that shortfall.
It goes back to redlining. Banks and government agencies for many years gave out the riskiest ratings to predominantly Black neighborhoods, keeping many families from getting affordable loans for their homes or for their businesses. But despite fair housing laws, racial disparities in home ownership, it's worsened in the last 25 years. At the same time, the gap in home values in white and predominantly non-white neighborhoods has increased. Then there's the gender pay gap. While economic disparities for women have narrowed since the 1970s, the gains have been slow and they remain precarious. During the COVID-19 pandemic, women, particularly women of color, have been hit hard by job losses in services industries. Many women have been pushed out of the workforce entirely. The number of women who want jobs but say that they're not seeking work due to family obligations, that's more than twice as high as comparable statistics for men.
These gaps have an impact on millions of people, and they take a dire toll on the broader economy. Bank of America says that with gender parity, global GDP could increase by $28 trillion by 2025. Unfortunately, at the current rate, it will take more than 250 years to close the economic divide. Meanwhile, in the U.S. alone, Citigroup estimates that the racial wealth gap has cost the country an estimated $16 trillion in lost economic output over the span of 2 decades.
All right, so we know inequality has been deepening for decades, but it was in 2020 that brought a groundswell of protests against racial violence, and then suddenly, these issues were just too impossible to ignore.
That's right. Institutions have finally had to admit the need for change, which is a positive step. But Wall Street veteran Carla Harris reminded us it's just one step.
I think the issue or the big impediment is the how. People obviously understand the what, and the what was around before last year. And in this last year, I think people have really gotten their arms around the why. Why is it important? Why is it an imperative? What difference will it really make for us? But I still think the how is the impediment.
The first response from major banks and money managers, huge funding initiatives aimed at helping close the wealth gaps. JP Morgan put up $30 billion. Bank of America and Citigroup also made billion-dollar pledges.
All right, well, those numbers, they sound impressive, but there are decades of damage to be reversed. Lenan Nguyen, who covers equality in finance for Bloomberg News, she talked about this. And since this flood of commitments came down, she's been asking people in every capacity on Wall Street, executives, investors, employees, whether it's enough.
I have to say my sources don't think it's enough. Many of my sources think it's a good start. Let's have the conversation. Let's keep the momentum going. But still, many of my sources in the industry say this is long overdue. This is just cracking the code just a little bit, but it hasn't led to a wholesale or systemic change.
It definitely is not enough. I mean, there are lots of headlines that I am pleased to see that have come into the marketplace over the last year. But as you and I were talking about last summer, I said, let's have a conversation in the summer of 21, and let's really talk about what has been done.
One obstacle to change is that the financial industry looks almost nothing like the communities it serves. Companies have only recently started to reveal details about diversity in their workforces, and many are still resisting calls from investors for independent audits. Still, the last year has brought about some progress.
When George Floyd was murdered, Mark Mason, the CFO of Citigroup, was the only Black executive on the C-suite of the 6 biggest banks. Now, a year later, there are more than 120 executives on those C-suites, and 9 of them are Black. So there's been a big change at the top.
The biggest changes are being driven by demands from clients and consumers. Investors are starting to hold companies accountable for racial and gender fairness, paying attention to clients they deal with and people they hire.
What I think that you're seeing is not only a resurgent commitment to talking about the moral imperative and the economic opportunity, not just for people in those diverse affected communities, but all communities which are connected, but you're hearing it from different voices, including lead voices in the majority community.
I think for many corporates and individuals, what changed was they said, well, we have to do our part, right? There's an old saying that, Wall Street oftentimes used, which is you don't want to be on the wrong side of that trade.
Generations who are coming into the workforce today are way less tolerant and accepting of it's going to take time. How about now? How about now? And if not, why not?
The current reality is there are still huge gaps in access to capital for minority-owned businesses. The numbers are dismal.
Black women are starting businesses at the fastest rate of any demographic. And yet today, Black women are 24 times less likely to own a business than a single white man.
The reality is people of color are the fastest growing entrepreneurs right now because Black entrepreneurs in particular have not been invested in parity with their white peers. The economy's lost $300 billion and the opportunity for 1.1 million jobs.
We look at just the VC funding that has gone to women-led businesses or minority-led businesses. It is tiny, 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 tiny. So any money that is made available is desperately needed, and it will make a difference. But it's a question of keeping the momentum going as well.
How do you keep that momentum going? How about getting more diversity into the rooms where decisions are made?
That's what we'll talk about next, as money inequality continues.
This is Bloomberg. Lumber prices across the U.S. are skyrocketing. A 60% surge this year sent prices to a record. And analysts, they aren't expecting any relief until late 2021.
If you can get your hands on it, you're going to buy it, no matter what the number is. And the numbers are getting higher and higher.
Tightness is acute across the entire timber supply chain. Sawmills have had trouble ramping up fast enough to meet demand, while trucking delays and worker shortages at lumber yards have added to the cost. The summer peak of U.S. home building is expected to deepen these supply constraints and keep home prices red hot.
What's happening is lumber's going up, insulation's going up, stucco's going up, concrete's going up, and that's getting passed on to the consumer.
According to the National Association of Home Builders, wood costs have already added more than $24,000 to the price of the average new house. Lumber prices are expected to stay elevated for months to come.
Welcome back to Money and Equality. I'm Shanali Bassick.
And I'm Romaine Bostic. The complexion of Wall Street, it looks nothing like most of America. Clients, investors, regulators starting to take notice, and that's pushing banks and financial companies to take action.
People are more conscious about what does our workforce look like? What do our leadership ranks look like? And is there an opportunity to promote and move in more women and people of color?
It's not just about filling the seats with the numbers. It's about really seeing people professionally move through the organization. And what that's going to take is consistent, intentional focus.
The numbers out there show there's a lot of work to be done. At the major banks that have publicly released their equal employment opportunity filings, a tiny percentage of top officials and senior managers are Black men and Black women. For many banks, it's the first time this data has even been revealed at all. Although Bloomberg reporter Lenan Nguyen points out, the industry is becoming more open about diversity.
I think there's been an acknowledgement that the numbers are low, that the number of Black executives in particular, and other people of color, but the focus has been on Black Americans in the last year, is very low. And so I think a lot of them have decided, okay, well, let's just rip the Band-Aid off, and here's our starting point. It's low, we want to do better.
So how do these companies do better? Many of those we spoke to agree that diversity in leadership is critical.
It is so important if we're going to really advance equity and equitable outcomes that we have leadership in terms of the executive suite and the boards and those that are in governance and have the chief influence in the organizations that represent the society that we live in.
I mean, I've changed over my leadership team since I've been here, and the leadership team leading home lending at Wells Fargo is 58% diverse, and we are performing exceptionally well. And so I think busting the misnomers about high potential performing diverse teams can drive great outcomes.
For us, a key thing has been having senior female leaders in very visible roles. Over half of our assets under management are managed by women. That tells women in the pipeline that there is a pathway from entry level to senior leadership.
The gender pay gap is just one example of how the pathway to success is steeper for women. While more women are finding work in finance, the representation in senior leadership at the major banks is still lagging. Kate Luzio worked on Wall Street for years before founding the Women's Network Luminary. She says money is only part of the problem.
It's not just compensation, it's opportunities for development. It's companies taking risks earlier on in women. And more importantly, it's showing them that there is a career path, charting that career path out for them, and making sure there are policies that support them regardless of their choice. Becoming a parent, flexibility, moving roles. You just don't see that as much in Wall Street.
How come there hasn't been, from your own experience, more advancement over the last couple of decades?
I was invested in, I was developed, I had great mentors, but at the end of the day, I was poached and recruited. Rather than those companies looking within their own company and saying, who can we develop earlier? Who can we take a risk on? Who can we put in this job and really invest in their skills, even if they're not ready yet, because that's the biggest excuse. We're just going to go find someone else that can do it.
Banks are also looking more critically at how they set up the talent pipeline to get more diversity at the entry level. Carla Harris says it's about time.
So often in financial services, whether it's in fixed income or equity or investment banking, we have thought narrowly as an industry that someone has to have not only strong analytical and quantitative skills, but they need to come from this school and they need to have had this exposure. But far too long, financial services have looked for people in specific verticals. Well, my colleague said, well, wait a minute, if we need a great salesperson, you can find great salespeople in pharma. You can find great salespeople in technology. You can find great salespeople in operations. So let's broaden what we're looking for and look for those key success factors. We can teach the financial piece.
When we talk about the ability of finance to create change, we also have to look beyond the banks. Asset managers and private equity firms play a huge role in deciding where the money goes. Take the Carlyle Group. It employs almost 1 million people across all of its portfolio companies. It's one of the only big buyout firms to have a non-white CEO, and its executives are thinking about diversity at every level.
Look, it's clearly the right thing to do, but it's also a really smart thing to do for our business. We looked at our own data. We looked at the boards of our portfolio companies. And over a 3-year period, what we found was that those companies that have a diverse board saw average annual earnings growth that are 12% higher than those companies without a diverse board. So this is clearly a value creation. This is a way to add value and make those companies more successful. And we're in the business of doing that.
Romaine Carlyle has set a goal to have 30% diverse directors on the board of all of its companies within 2 years. Many of its rivals are moving in a similar direction.
And we know that board diversity, it's an important benchmark for progress. But when you look at private equity as a whole, you have Apollo estimating that there are only 100 black executives out there in an industry that manages a collective $4 trillion.
Bottom line, there's a big push for change right now, but results will take time. We want to give the last word here to Wells Fargo's Christy Furco, the only black woman to lead a national mortgage business of a major bank at that scale. She gave us an encouraging view from the front lines.
I'll just tell a great story. One of my direct reports had a job open, and the job had been open for 3 weeks, and he comes and shares with me that the lead candidate is a white male. And I said, it's been 3 weeks. You haven't tried hard enough. I want you to go find a diverse candidate. And the search took 4 additional weeks, but he came back and he made the offer to a Hispanic female. And he said to me, I have to thank you. I would have hired the white male. And he said, as a result, I have a more qualified, better candidate, and she happens to be diverse. And that's the opportunity with diversity, is don't go for the easy fix, right? That's what's in front of you, but work harder to find the best talent.
Coming up next, getting capital to communities that the financial system hasn't always seen.
And how policymakers can make this process smoother.
This is Bloomberg.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Welcome back to Money and Equality. I'm Romaine Bostic.
And I'm Shanali Bassick. Financial firms are recognizing the need to build equality into their business model. But Bloomberg reporter Lenan Nguyen notes that there are structural inequalities that determine who gets heard on Wall Street and who doesn't.
People have sought out help from HR and been rebuffed, right? There are some very egregious instances of people, suffering from racist incidents, and then having them go nowhere, and having the people who perpetrated the racism stay in the firm because they're producers or because, HR kind of sided with somebody else. It's an experience I see time and again with people of color or marginalized people aren't heard. And, it speaks to a broader structural issue that, the people who are in the out group, just aren't heard and continue to sort of face these barriers.
The same questions of empowerment are dominating the economic discussion in Washington. The Fed, under Jerome Powell, making racial and gender disparities part of the conversation on monetary policy. And you have President Joe Biden making equality a priority for his administration. Cecilia Rouse is the first Black woman to lead the Council of Economic Advisors.
Here at the Council of Economic Advisors, for example, we are really doing a careful look at federal statistics and to ensure that that there are adequate samples of people for different groups so that we can measure and be keeping track of, for example, the unemployment rate by subgroups.
When we're talking about inequities, right, that's not solved by better monetary policy, right? That's solved by fair and equitable not only employment practices, but promotion practices and provision of opportunities.
Well, I think one of the things that the federal government can do and President Biden will be able to do is to use the bully pulpit to push hard for the federal government to do business with minority-owned companies in everything we do.
Harold Butler oversees banking services with the U.S. government for Citigroup's investment bank. He also helps manage the bank's work with minority-owned financial institutions, whose numbers have dwindled in the last decade.
Up until recently, there has never been a Black financial institution that has assets over $1 billion. Now, basic statistics will tell you that in order to make a meaningful change in communities, right, to be able to be empowered to support communities, you got to have assets over $1 billion. The work that we started with the Treasury Department was about creating opportunities for minority deposit institutions to do business with Treasury. Industrial Bank is the bank that's actually doing business with the government today. Is historical. They're the first and they're only Black financial institution to actually do business with the Department of Treasury. That's fundamental. That's game changing, right? Because it creates a new line of revenue, but it steps up really to focus on some of these banks, and it gives them an opportunity to participate in things well beyond retail banking, for example, and making small loans.
As the racial wealth gap widens, disparities in home ownership continue to hobble minority communities. But in 2020, Wells Fargo made Christy Furco the first Black woman to lead its home lending division. She's made it clear that she aims to put more Black people in homes, and she understands the challenges of doing so.
There's an issue around being able to save for the down payment. So down payment assistance is really important. FICO scores, continue to be lower for Black Americans than they do for the general population. And so working on access to credit in that way. And then affordable housing supply. If people can save the down payment and get ready, there aren't the availability of housing. And with the limited housing supply market that we've seen, it's more and more difficult for that affordable housing supply to move forward. So those are the barriers that we consistently see.
Melissa Bradley is a serial entrepreneur who has also launched business development programs. She says the pandemic may actually accelerate the growth of minority businesses, creating more entrepreneurs ready to put investments to work.
While we say that entrepreneurship at large has somewhat been on a decline, I would say amongst communities of color, it's been one of the fastest growing aspects of their life. And probably for one, because it's an opportunity to oftentimes fill that gap where their paychecks don't meet all of their bills.
How do you create a system here where you can ensure that those folks who have good ideas can actually connect with the people who have the money who think they are good ideas?
There's been a plethora and increase in crowdfunding and the kind of democratization of people having access. Certainly, CDFIs have now been better funded and have received a lot of money and resources to particularly put towards Black and brown businesses. And obviously, again, unfortunately, because of George Floyd, you now have lots of corporations who have made commitments to be able to help Black entrepreneurship thrive. And so you're beginning to see more grant programs. You're beginning to see more alternative types of capital.
Many also think the Fed can do a lot more. Katerina Saraiva covers the economy for Bloomberg News.
We know the main regulatory entity for banking when it comes to lending to minorities is the Community Reinvestment Act. And that isn't really a powerful tool. There's an overhaul right now going on of the CRA. It's still kind of being debated right now, so we don't know what that's going to look like. So that'll really be interesting to see if they do give it more power.
How does that tone from Washington run into, influence changes on Wall Street and corporate America?
Oh, well, I think it's extraordinarily helpful when you get that kind of message from the top. But let's make no mistake, the person at the top can have a lot of focus, can be loud about it, but there needs to be that measure of accountability in the middle. By the time the narrative gets up to the CEO, the narrative has been changed. So you need to make sure that there's a measure of accountability in the middle if you want it to be successful.
That wraps up our special report on money and equality. But Bloomberg's coverage of equality, it doesn't stop here.
For more news, opinion, and analysis focusing on equality around the world, visit Bloomberg.com/equality. Bloomberg Terminal clients can use the function EQLY Go.
And we want to hear from you. You can reach out to the Equality team on Twitter at BBG Equality and on Instagram at Bloomberg Equality.
Thanks to everyone who spoke to us for this program.
And thank you for watching. I'm Romaine Bostic.
And I'm Shanali Bassick. This is Bloomberg.
Really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit Search Go to find answers now.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Imagine the ability to cure genetic disease for generations to come, to inoculate the human race against the next COVID-19 before it becomes a pandemic, or in a darker scenario, to choose the color of your baby's skin. Dr. Jennifer Doudna pioneered a technology that may one day be able to do just that, one of the biggest scientific breakthroughs of our lifetimes. It's called CRISPR, a bacterial defense system that can edit genetic material. It already shows promise in eradicating malaria mosquitoes, appearing to cure patients with sickle cell anemia, improving cancer therapy, and diagnosing COVID-19 more quickly. And at the height of the pandemic in 2020, Doudna, along with Emmanuelle Charpentier, won the Nobel Prize in Chemistry for their CRISPR innovations. But there are major ethical questions looming. How and when is it right to edit a gene? Is CRISPR playing God? One Chinese scientist claims he's already edited the genes of twin girls, giving them immunity to HIV and sparking an international uproar. Right or wrong, one thing is clear. CRISPR will change the human race forever. Join me on this edition of Bloomberg Studio 1.0, biochemist and CRISPR co-inventor, Jennifer Doudna.
You grew up in Hawaii, and I am so curious. I grew up in Hawaii as well. How did your upbringing shape your curiosity about the natural world and the origins of life?
When I think back on that time in my life, it was kind of a wonderland. You know well what it's like in Hawaii. It's a very special place, and I found myself just wondering, how is it that these plants and animals have evolved to be specialized for Hawaii? And there are so many examples of that in the natural environments in the islands there. So I definitely think that was behind my thinking about, why it would be interesting to become a scientist in the future.
As a budding scientist, you developed an early fascination with RNA well before it took center stage in the pandemic, and also now a key player in vaccines. What is it about RNA that gripped your attention?
When I was an undergraduate in college, we were, or at least I felt like the message we received was that RNA was kind of the boring intermediary between DNA, which encodes all genetic information in cells, and proteins that do the work in the cell. And so those were kind of the important big molecules in biology. And then there was this kind of boring intermediary called RNA. However, when I got to graduate school, I met the person who would become my future advisor, Jack Shostak, and he was fascinated by the possibility that RNA, in fact, was the original biological molecule on Earth, that it was really responsible for the evolution of life as we know it here on Earth. And that idea was so interesting and so compelling to me that I joined his lab and I started studying RNA, and I sort of never left it.
Now, you spent most of your career working at universities. You're joining us now from Berkeley, where there's a lab named after you. But you briefly ventured into the corporate biotech world in 2009 and worked at Genentech for just 2 months. Why was that so brief, and what did you learn?
It was a really important experience for me, I have to say, even though short, because at the time I had been running my academic research lab for close to 15 years. And I was starting to question, what the impact of my work would really be. Was I actually going to, at the end of my career, feel that I had contributed to solving real-world problems? And so that was a big motivation for me to join the team at Genentech, a wonderful company where I knew a number of the scientists and some of the leadership team. However, once I got to the company, I quickly realized that I really missed my colleagues at Berkeley. I missed the academic environment of, being able to just think crazy ideas and, run into people in the coffee line and chat about experiments in a way that would be very difficult to do in a company, of course, because you have to be very focused on the plans and development pipeline of the company. Fortunately, my colleagues at Berkeley took me back, and I refocused my efforts at the time on studying CRISPR, which in the end was, turned out to be a very productive line of work.
It's been called molecular scissors, if you will. What is CRISPR and what can it do?
It turned out that CRISPR is in fact a system in bacteria that detects and cuts virus genetic material, whether it's DNA or RNA. And it was by studying how that actually works, and we did this in collaboration with Emmanuel Charpentier's lab, to study the function of a protein known as CRISPR-Cas9. That line of research led to an understanding of the function of this molecule that allowed us to harness it as a tool for genetic manipulation, namely for altering DNA sequences in any cell in a precise fashion, in a programmable fashion that gives scientists now a very powerful way to understand the function of genes, but importantly also to change the function of genes in a targeted way.
When did you realize the power and usefulness of this discovery?
Well, I would say almost right away. I mean, it's a relatively simple technology that can be easily adapted and adopted to different applications. And so very quickly after we published our work in the summer of 2012, labs around the world began to adapt CRISPR for various kinds of genome editing, and it's just increased since then.
The pace of CRISPR research, the application has been startling. It's been incredible to watch. What are the current use cases that inspire you the most?
Well, I always think about Victoria Gray, who was the first patient with sickle cell disease to be treated with CRISPR here in the US. Her story is so inspiring. I mean, she is somebody who is benefiting right now from the CRISPR technology to be able to live a normal life without being impacted by an otherwise quite devastating genetic disease. And other patients are similarly being impacted by the CRISPR technology. So I think that's one area where we'll see increasing developments, more and more clinical trials that are starting. In fact, at the Innovative Genomics Institute that I started a few years ago here in the Bay Area, we have just received approval from the Food and Drug Administration for our own investigational new drug, or IND, trial for sickle cell disease. So, this is really an extraordinary moment, I think, in terms of thinking about cures for genetic disorders.
Once CRISPR was confirmed as a gene editing tool, leading researchers raced to start their own companies, and it turned into kind of a competitive free-for-all. And the battle for the intellectual property is still going on to determine, who can commercialize this technology. How do you reflect on all of that?
One thing important to point out is that despite the ongoing disputes over patents, which, by the way, isn't unique to CRISPR, I would argue that any really exciting technology is going to have multiple claims to it. In the case of CRISPR, because the technology is relatively straightforward to deploy, it's meant that the field has moved quickly. As you mentioned, there are multiple companies. There are multiple companies that are now publicly traded and more coming down the pike, as well as all sorts of new companies and then established firms that are adopting the technology as well. So from a scientific perspective, I think that's exactly what should be happening, right? This is such an enabling technology. You want it to see it deployed as widely as possible.
What was your first thought when you heard that news?
I guess it wasn't entirely unexpected that someone would try to do this. I had no idea that it would happen as soon as it did.
research and discovery of CRISPR did you start becoming worried about the ethical implications?
Well, quite early on, because it was clear from those very early days that CRISPR was a broadly enabling technology that was useful and worked in essentially any cell type, and that meant that it worked not only in fully developed differentiated cells or tissues, but it could also be used in embryos. And in fact, that was one of the very early uses in the research world, was to make modified mice at the embryo level. So those mice then had genetic changes introduced by CRISPR that could be passed on to future generations. And it didn't take too much of a stretch to think about the possibility that could also be done in human embryos, which of course I think comes along with just very profound ethical questions. I think it was 2015, we organized the first meeting out here in California on the topic of human germline editing, human embryo editing with CRISPR. And that developed into a much broader international effort to understand the technology and, importantly, to put in place criteria that scientists globally should respect in terms of applications of CRISPR, especially in the human germline.
Let's talk a little bit more about the reasons. If and when to edit genes is a profound and complicated question. How do you even begin to answer that question?
I think, first of all, one has to ask, are there situations where, at least in principle, manipulating the human germlines in the embryo would be the best possible way to deal with a genetic condition? And by the way, I'm focused here on just really strictly things that relate directly to health, rather than changes that might be desirable to somebody for some reason, but actually have no benefit to health. And right now we know that although yes, it can be used in human embryos, and there are multiple scientific publications about that, we also know that it's difficult to control it and to make sure that editing is happening exactly as the scientist or experimenter might be desiring. And so that, to me, is already a red flag that, even if there were situations where we said, gee, that might be the best way to deal with a disease, the technology still needs to be further developed before that would be, I think, even a possible strategy.
Every new gene editing technology has its sort of cultural shocker moment. You had the first test tube baby, Dolly the sheep, and then, of course, in 2018, the so-called designer babies, where twin girls, their genes, were allegedly edited by a Chinese scientist, He Jiankui. What was your first thought when you heard that news?
Shock, for sure, definitely. I guess it wasn't entirely unexpected that someone would try to do this. I had no idea that it would happen as soon as it did, but, it had been discussed at meetings, of course, and that was, in fact, the purpose of these prior, conferences on the topic. So it seemed, it certainly seemed possible that someone would do this. I didn't think someone would actually proceed, however, to actually create a pregnancy with edited embryos, as was announced in 2018. And I think it really was a wake-up call to the international community that we can't sit back and just say, well, that's a problem for the future. No, this is something we need to deal with right now, and we need to take a strong stand. And I think, fortunately, that's exactly what happened.
Are other scientists trying these things elsewhere?
We really haven't heard about that kind of manipulation going on, certainly in any organized way. So I just think that, at least I hope, that the international reaction, which was really negative to this 2018 announcement, has I think, at least for the time being, really put a damper on anyone that might be trying to do that kind of human manipulation for, fame, for example. I do feel an ongoing sense that we need to be really proactive about this and not get complacent. And importantly, I include in sort of ethical considerations also thinking about widespread availability and affordability of the technology, because I think, this is something that we have to pay attention to. I mean, just thinking back to the example of Victoria Gray, who I mentioned earlier, who has received a CRISPR treatment for her sickle cell disease. Wonderful, news about that. However, her therapy currently costs $2 million. So, that's just not going to be affordable to most people around the globe that might need this. So we're working hard to think about ways that we can mitigate those costs.
Wanting to eliminate a genetic disease seems like an important cause. Do you think the moral case to eliminate a genetic disease is stronger than the case not to?
I think we have to consider it, on a case-by-case basis. I mean, one could argue, for example, let's go back to sickle cell disease, that, right now the therapy is designed to be used in individuals, and it doesn't make a germline change, right? It's not a change that they would pass on to children. It's just a change that affects their body. And so in that sense, it's like any other type of therapy or drug that we might use to treat disease. Whereas you could imagine that in a family that has a genetic disease that is sort of, spread across their family, many people inheriting a gene that, predisposes them to disease. And believe me, I hear from families like that almost daily. You could imagine that, at some point in the future, if the CRISPR technology were safe and robust, that some families might make the decision to remove that disease-causing mutation at the source, so that, future generations don't have to worry about it. And I think that's, that would make a lot of sense. But again, there's a number of things that have to happen, I think, before that will be possible.
Back in the 70s, test tube babies were controversial, and now IVF is widely accepted, available. Do you think it will be the same with CRISPR-edited babies?
Over the coming decades, I think, sure. I think absolutely, that because this is what happens, isn't it? Is that, people get comfortable with an idea if it's useful, if it is proven, and this is, this is still remains to be seen. Like if CRISPR proves to be useful and kind of controllable in human embryos, and that is still in the realm of research. But if that were to happen, then, I think it becomes a possibility that in vitro fertilization clinics offer that to their clients. And so then, who should make that decision? Should governments be regulating that? Well, that doesn't really happen for IVF clinics right now. In fact, there's, as you probably know, there's, different regulations across different states in the U.S. and of course in different countries is different. And so I think, the same thing could possibly happen with CRISPR, where, it becomes something that, some clinics offer it, and parents will have to decide, do I want to do that or not? When new technologies come along, they enable new science. When new science is done, they enable new technologies.
What do you say to the skeptics who say that CRISPR is playing God?
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there has been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada is going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax
in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
The ethical controversies around CRISPR came screeching to a halt when the pandemic hit. What was going through your mind when the world met COVID-19?
Well, I think like many people, it was quite a shock. This was something that we really had to face head on. And that was actually, for me as a scientist, really a motivation for pivoting the focus of our work, at least over the last year, to creating a clinical testing lab at the Innovative Genomics Institute, and also to advancing CRISPR as a diagnostic technology.
You've had this fascination with RNA for so long, and did you ever think that your RNA specialty would have a moment like this, the key to fighting a global pandemic?
Well, no, I never thought that, for sure. And let me just point out, since you brought up RNA, I think it's fascinating that, first of all, the coronavirus, the SARS-CoV-2 virus that causes COVID-19, is an RNA virus. So it's a piece of RNA that's, been causing all this havoc. And furthermore, many of us have received vaccinations with RNA, right? So I received a vaccination that is a messenger RNA that carries a message into human cells telling them, make antibodies against this virus protein. And so that's been also very interesting. So RNA to fight RNA. And then with CRISPR, we have a third type of RNA that potentially could be useful, I think, primarily in this case as a diagnostic tool, a way to detect the coronavirus RNA and report on its presence.
Couldn't CRISPR one day also be used to edit our genes to make us less susceptible to viruses?
Well, maybe. I mean, there's definitely speculation about that. Would it be possible to, I think about it sort of like genetic vaccination, in the sense that, could we educate ourselves ahead of time to be, ready in case a virus shows up? And it's, it's a tricky thing, right? Because, you have to kind of know what to be ready for. And so, there would have to be some interplay there. But I think already we're seeing opportunities to use CRISPR to edit immune cells, and this is being done in conjunction with cancer immunotherapy for patients, for example. So you could imagine taking that a step farther and saying, well, can we educate our immune cells to be ready for a virus?
What do you say to the skeptics who say that CRISPR is playing God?
Well, I guess my answer there is that, there are I don't even know how one defines playing God, because, there's so many things, ways that we manipulate our environment now. For example, all the food we eat is essentially engineered because of, plant breeding that's been going on for, thousands of years, really. And so when new technologies come along, they enable new science. When new science is done, they enable new technologies, et cetera. And in the end, that's really what drives human advancement, and it drives our economy in many ways. So I feel that overall this is all positive, but scientists really need to be engaged in accepting that responsibility for what they're doing and making sure that they're involved in the discussions and the decisions that have to be made as technology advances, and that's certainly true for CRISPR.
Let's go ahead another 100 years. If the next COVID-19 happens in another century, how will things be different? How will we be more prepared? Will our genes have already been edited to prevent us from getting the next big deadly disease?
I wonder. I guess I imagine that certainly within 100 years, we will know so much more about our own genomes. And, the more we learn, honestly, the more complicated it clearly is. But so there'll be plenty to keep all of us busy. But look, I think in 100 years, we will know so much more about our own genetics, including the genetics of our immune systems and our interactions with viruses. So my hope would certainly be that, you know, if the next 100-year pandemic comes along, that we will be certainly much better prepared to manage it than we were for this one.
So in the middle of this global pandemic, in October 2020, news came in that you won the Nobel Prize for CRISPR, which you shared with Emmanuelle Charpentier. 2 women winning the Nobel Prize. Looking back on those days when you were told girls don't do chemistry, what do you have to say to inspire the girls out there who might want to follow in your footsteps?
Well, it's, you know, just such a kind of humbling experience for me in a way, because I mean, I certainly never, ever in a million years would have imagined that, you know, I would have won the Nobel Prize. And I'm even sort of shocked hearing myself say it right now. But here's an interesting thing that's happened, and that is that I've heard from many, many girls and women since then, some of whom I knew from my past life, but many of whom I don't know, who have reached out from all over the world to tell me their stories, to tell me that our work is inspiring to them. And I really hope that that message gets through very clearly to students, especially to women or other people who feel maybe they have been excluded in some ways from, or just been underrepresented in the STEM fields. That, you know, I certainly didn't come, I'm not a likely person to have won the Nobel in a way, you know, because I came from a small town. Nobody in my family was a scientist. I just kind of wanted to do science. I thought it was cool. And that's the message I try to tell those students. You can do this.
Well, thank you for paving the way for women and for all of the girls who will come after. And congratulations. Dr. Jennifer Doudna, thank you so much for joining us on this edition of Studio 1.0. It's been wonderful to have you.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
In the fight against COVID-19 worldwide, the Bill and Melinda Gates Foundation has committed a staggering $1.75 billion to vaccine development, distribution, treatments, and more. It's one of the largest sums from any philanthropic effort around the globe. But while mass vaccinations are rapidly underway, the pandemic is far from over.
There is a clear problem that low and most middle-income countries are not receiving the vaccine yet.
Urgent concerns about unequal distribution and recovery remain. and the possibility that not just developing countries, but women across the globe will get left behind. Joining me on this edition of Bloomberg Studio 1.0 to shine a light on the uneven road ahead, co-founder and co-chair of the Bill and Melinda Gates Foundation, Melinda Gates.
Melinda, it's been a year since the pandemic completely changed our world. From your perspective, where are we right now in the fight against COVID?
Well, I think we still have a ways to go. You know, we're seeing the light at the end of the tunnel here in the United States, but until all Americans are vaccinated, we still have a ways to go. But, you know, it's going to be a while until the entire world is vaccinated. So this is going to still be with us the next few years. And I think we're going to have to really watch these variants that'll be bouncing around the world. That's actually still quite concerning.
What is it about the variants that concern you?
Well, because every time we know viruses mutate, but when they mutate, you know, they can become sometimes more deadly or more contagious. And so anytime you see these mutations, we need to be on top of them in terms of surveillance. And then we're going to have to figure out, do we need to tune various vaccines to take care of them?
So your foundation has committed $1.75 billion to the fight against COVID. I know your team is very diligent about looking at where and how that money is spent. In your view, where is the vaccine rollout working and what's not working?
Well, I think it's working in some of our high-income countries. We're starting to finally see, you know, much broader distribution, for instance, in the United States and in some of the European countries, but it is not at all working yet for middle and low-income countries. And, you know, those are places where people are struggling. They have their loved ones who get ill. They can't get them to a hospital, much less an ICU. And so they are really still struggling in many countries around the world.
So there's obviously a moral case for vaccine equity, but what about the economic case? Why should somebody in New York or San Francisco care when somebody in Africa gets the vaccine?
Well, absolutely, it's the right moral thing to do. But economically, we're not going to have as swift a recovery in the United States or in Europe if we don't make sure that everybody gets vaccinated, because what will happen is this disease, you know, we know it crosses borders. We've seen it all over the world. And so as these variants break out, they will absolutely come back into the United States and Europe and Japan. And so our supply chains won't fully be up and running. We won't get our travel industry fully and leisure up and running, or the business community up and running in terms of travel. So economically, if we're going to reopen the global economy, we've got to take care of this everywhere.
So if vaccines aren't distributed equally, obviously there's economic consequences. There will also be more deaths. What are the consequences of that?
Well, more deaths, I mean, it's a tragedy for every family that experiences a loss. But it's also, I think we have to remember, it's wreaking havoc on the healthcare systems of these countries. And so what it means is a mom who is pregnant doesn't go in for her antenatal visits. She doesn't go in for delivery. So she has an unsafe delivery at home. It means we have 49 million women that won't get contraceptives during this pandemic. That means 15 million unplanned pregnancies in 1 year. That's like adding up the cities of Chicago, New York, and LA and saying we're going to have 15 million unplanned pregnancies. Wow.
Vaccine nationalism is stepping up as this continues. You've got nations competing for supplies. Do you see a better way?
Well, I think, you know, we started off as a world with a good way, which is to try and pool both the demand and match it to what would be the supply and to have financing for that. You know, the U.S. didn't come into that financing until the last stimulus bill that happened in December. They finally put money forward for Gavi, which helps with this facility called COVAX to purchase vaccines and get it organized. We just now are coming in with this latest stimulus bill for testing and treatment. But, you know, that would have been the way to go, is to really match global demand and supply and first get it out to all the healthcare workers all over the world before you even begin then going to vulnerable populations.
Meantime, there's continued disinformation about vaccines. How do you and Bill see that kind of disinformation, misinformation?
Yeah, when you see it, I will say it's incredibly disheartening, because honestly, it causes death. People not doing the right thing, not getting their mom or their elderly father vaccinated, we'll lose more people. We are losing more people. So it's disheartening. On the other hand, as more people are getting vaccinated, just take the United States, we're seeing more demand for vaccines. So we're finally seeing the counter-cyclical part of that argument, but it's always disheartening to see something like that.
Now, a huge part of your job before the pandemic was traveling around the world, meeting people, talking to them in person in far-flung places that most of us don't get to go. How has your job changed during COVID, now that you can't make those trips?
Well, I think like so many others who are lucky enough to be able to have access to a computer and a good internet, right? I'm doing a lot of meetings online, and they are pretty continuous throughout the day. I am certainly meeting with still leaders around the world, even community organizers around the world. But I miss the deep connection and interaction with women in her home, or a man who's working in his field, or the children. I miss that, and so I look forward to when that will return, hopefully in the next year.
What are some tangible things you would like to see from the White House that would really make a difference for women?
I would love to see an innovation fund focused on childcare.
Lumber prices across the U.S. are skyrocketing. A 60% surge this year sent prices to a record. And analysts, they aren't expecting any relief until late 2021.
If you can get your hands on it, you're going to buy it, no matter what the number is. And the numbers are getting higher and higher.
Tightness is acute across the entire timber supply chain. Sawmills have had trouble ramping up fast enough to meet demand, while trucking delays and worker shortages at lumber yards have added to the cost. The summer peak of U.S. home building is expected to deepen these supply constraints and keep home prices red hot.
What's happening is lumber's going up, insulation's going up, stucco's going up, concrete's going up, and that's getting passed on to the consumer.
According to the National Association of Home Builders, wood costs have already added more than $24,000 to the price of the average new house. Lumber prices are expected to stay elevated for months to come.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
In your annual letter, you and Bill said the recovery starts with women. What do you mean by that?
Well, women have had the most devastation, women and people of color, during this crisis. We know women have left the labor force in droves. We know they're at home with this complete caregiving crisis, taking care of the young, taking care of the elderly. And so if we're going to have a full response and a swift response, we have to stop thinking as a world of gender equality as this nice thing to do when we get to it, or this side issue. No, it is the central issue. If we're going to get a full recovery and a swift recovery, we've got to address all of the issues that are facing women. We are in a crisis for women and people of color in this country.
Now, the last time you and I spoke, it was about your book, The Moment of Lift, How Empowering Women Changes the World. That came out 2 years ago on the heels of Me Too. There was a lot of hope. Have you seen that play out, or have you seen progress derailed?
We've seen, I would definitely say that was a moment of optimism for me. And I would say now I think women are in a moment of crisis. So we've seen a lot of work derailed. We've seen women who, women in the last 30 years were coming out of poverty as a globe, and now we're seeing a huge setback in that arena. We're seeing setback in the labor force. The number of women who've stepped back from the labor force in the United States, 2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis. But then on the flip side, I see these female leaders, Prime Minister Jacinda Ardern, Prime Minister Merkel, how well their countries are doing. Or I see these self-help groups in India that immediately mobilized and got messages about COVID out to millions of people in northern India. So I see the hope on the other side, but there's a lot of work to do.
I was planning to ask you about New Zealand's Jacinda Ardern and Germany's Angela Merkel. Do you think it's a coincidence that both of these leaders, who seem to have handled the pandemic better than any other leader around the world, do you think it's a coincidence that they're both women?
Not at all. I spoke with both of them pretty early in the crisis, but where New Zealand had just taken care of COVID in their country the first time, and Prime Minister Merkel had it under control in Germany. And I was also speaking to male leaders at the same time. But what I noticed when I talked to these two women a month apart is that Prime Minister Jacinda Ardern was thinking about all the island nations around her, and that they were struggling. And so, yes, they had it under control in New Zealand, but she was thinking about the whole ecosystem around them and everybody else. Prime Minister Merkel, when I talked with her about, wow, you all are doing an amazing job, she wanted to talk about the marginalized communities in Germany they weren't yet reaching. And she wanted to talk about how they were taking patients in from other countries into their emergency room and ICU. So they're thinking about everybody else. And I see that sometimes in enlightened male leaders, but I think for the women, it just comes really naturally.
So how did that compare with your early conversations with the Trump administration as you were working with the U.S. government to deploy your own resources?
Well, I think, there were certain people who are still in place who are absolutely incredible. Tony Fauci from the get-go, just an amazing leader. Francis Collins at the NIH. But, to talk to an administration who doesn't believe in science and basically wants to put their blinders on in terms of what the response needs to be in the United States, it was incredibly frustrating. And I am very happy to see a new administration who's not only taking this seriously, but taking very bold and concrete actions. That's what we should expect as Americans.
So how have your conversations with the Biden administration been so far, now a few months into it? What are you happy about in terms of what you're seeing? What needs work?
I'm seeing the Biden administration absolutely listen to the science, listen to the scientists, believe in the data. You're seeing them re-empower CDC. CDC just came out with great guidelines for people who have been vaccinated. So they've taken these institutions that were strong and robust, and they're empowering them again. I was incredibly pleased to see the latest stimulus package pushed through and funded so swiftly for Americans. That's exactly the kind of action we need as Americans.
The Biden administration just signed an executive order on gender equity on International Women's Day. What are some other concrete, tangible things you would like to see from the White House that would really make a difference for women in this country?
Well, I'd love to see an innovation fund. In previous administrations, there have been these innovation funds that make sure we get new innovations, for instance, in climate change or in other sectors. I would love to see an innovation fund focused on childcare. We have a caregiving crisis, not just childcare, elderly care too. We have a caregiving crisis, and yet there are great ideas out there, solutions for how you match markets, you match caregivers, affordable, good, high-quality caregivers with parents, or you match grandparents with college kids so they can get their prescriptions. Those kinds of ideas need to be funded and come forward so that we can come up with new innovations in society.
When it comes to women and how much they've backslid in the pandemic, do you think we could see a lost generation of women as a result of the trauma that they have experienced in the last year?
I think we could, but I don't think it's a necessary or a necessity. And I think, one of the things the Biden administration is talking about is paid family medical leave. We are the only industrialized country in the world that doesn't have it. And it's far from time we had it. And so I think we can take this crisis that's happened to women. Women are in crisis at home. They are carrying a lot. But we can use it to say, we're not just going to propel these women and help them back in the workforce. We're going to change the structure of the workforce for the next 30 years so we make it possible for moms and dads or like-minded partners to work. We're going to look at this as a forward-looking workforce, not a 1950s workforce where our dads went to work and our moms stayed home.
Well, and speaking of how the workforce will change going forward, I believe we're going to be in a more hybrid environment in the future, more flexible work, more people working from home. And I wonder if we're going to continue to see women in this difficult situation. Like, how do you see the new normal for women being different than the new normal for men? And what should we be concerned about and preparing for?
I think we need to make sure that women aren't expected to now continue to care for the children and the elderly and keep their job going. They're in a crisis that can't continue. The toll on women is enormous. So I think we need to say, how are we going to make sure we support women? How do we bring them back into the workforce? How do we reskill them if they want to change jobs? How do we make sure they have access to good childcare, potentially even good universal preschool? And then how do we make sure as well that we're supporting them, that if they have a sick family member, there's not just maternity leave or sick maternity days, but there's paid family medical leave. So even the dad leaves the office to take the child to the pediatrician when the child gets sick or takes care of the elderly grandparents.
I wonder if you think we're going to see the most meaningful change in the world coming from philanthropy.
Ultimately, it's always up to government to scale up innovations to create this change.
Trading revenues coming in better than expected. Everything. Cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Friday is Jobs Day on Bloomberg Television. After April payroll numbers hit below estimates, investors look for a rebound in the labor market. The May Jobs Report, Friday morning on Bloomberg Television and Radio.
When you wrote your book, you shared that you quit your own job at Microsoft because you assumed that you should stay home and take care of the kids. And then at a certain point, you decided you wanted to go back to work. What were your motivations there? And, how would you encourage other women to summon their motivations?
I would say, you have to look at what you're doing and what your expectations are. And I think for me, it was always when I would hit these frustration points of, my gosh, why am I doing all of this and my husband is not, and so I think we all have to look in our homes and say, who's doing what? And how do we redistribute that workload? And we have to have those honest conversations with one another. One of the stories I tell in my book, when I did want to go back to work was, Bill and I knew where we wanted to put our children in school, but it was well far away from our house. And I thought, hey, we could wait maybe till 4th or 5th grade. And he was adamant. He wanted them to start at preschool. And I just said, look, I can't be on the road driving all the time. I see my road ahead and my life ahead in the minivan. And so he finally offered to drive the kids to school. And it not only changed a norm in our family, and he got that time with the kids, but when he went into the classroom, other moms expected their husbands then to drive, because they said, if the CEO of Microsoft is driving his kids to school, so can you. And it's those conversations at home when we see what's right there and we have awareness, we have the difficult conversation, that we remodel norms inadvertently, actually, in society.
I'm curious about female leadership, and if you think female leadership could suffer as a result of the pandemic. We need more women leaders to help continue to pave the way. But if they're running companies and households, does that mean we won't see as many women advance into leadership roles as we might have seen had the pandemic not happened?
Potentially, and that's why we need to make sure we support them. I mean, there are fewer female CEOs of Fortune 500 companies today than when we started into this pandemic. And, you can look at those on a case-by-case basis, but you also just have to look at what's coming up behind women. What's coming up behind that CEO? How many women and people of color are at all levels of leadership? That's where I worry the most. And so without good supports, without flexible work hours, without paid family medical leave, without a network of support around them, yes, you will see women drop out of these middle manager positions just as they're climbing the ladder. And so when we go to then promote somebody into the C-suite, there just aren't as many women. The harassment in the workforce, women change their job. 80% of women say they've been harassed in the workforce, and when they are, they leave their job within a 2-year rate. So they switch careers and they're not climbing the same ladder. That's a barrier we've got to look at.
Now, we do have our first woman vice president, who is also a woman of color, and I don't know if it's a sign that norms are changing, but my sons don't understand why there has never been a woman president. To them, it seems obvious, and I wonder, do you think it's time for a woman to lead this country?
Absolutely, it's time. And so there are many qualified women, but it's not very easy to climb the ladder in politics. So that's another place we need to support women at the local level, state level, federal level. We keep ticking up slightly in Congress in terms of the number of women in Congress, but guess what? We're still 60 years away from equality in Congress. And I don't think it's surprising that Kamala Harris came from the Senate. Those are great places to learn how to have the ultimate leadership role. But let's make sure women come up in politics so they're ready. And so there's a plethora of women we can choose from for the President of the United States.
What about children? After a year, for many kids at home, some of them don't even have access to a computer. How concerned are you about the digital divide and a lost years for our children, boys and girls?
I'm quite concerned. So first of all, there are hundreds of millions of girls around the world who are out of the education system, and many of them won't actually go back. And here in the United States, I'm most worried about the low-income children because, as you say, they don't often have access to broadband or to internet, or a teacher who's got a great curriculum to all of a sudden have to switch and teach online. That was a hard switch for teachers, but it's also a really hard switch for students. And so teachers have to be retrained and reskilled in the moment. So yes, they've lost a year of schooling, but the learning losses could be even more substantial for low-income kids, and I'm quite concerned about that.
For those who have had access to technology, we've had devices introduced to our children much sooner than we ever wanted to, and for some parents, that is terrifying. Are you concerned about screen time and the longer-term impact on a generation of kids?
Yes, I think we don't know what those impacts are. There is research that some of which has come out, some of which is ongoing. There are some positives, which is they can connect with friends, they're connecting online, they're finding meaningful opportunities sometimes online. But yes, I think we don't know what it means for a generation of kids to be behind that screen so often. And so I tell parents, just be sensible. Make sure it gets out of their hands. We know it's not great for a parent to be on and spend 40 extra minutes sucked into social media at night. How can that be good for a kid? So, all those things that, we know are just good parenting. Get the phone out of the room at night, take the hard steps. It's just going to benefit your child.
Do you think that schools should reopen? I mean, if adults are going to be vaccinated by May, maybe end of summer, it could be another year before our children are vaccinated. Should schools reopen in the fall regardless?
I think schools will have to look in district by district, what are the rates of COVID in their area based on people who've been vaccinated. We don't know where we will be in the fall with variants. So, looking at the data today that we have, it sure looks like we can start to reopen more schools. But again, this thing has been very cyclical. So what it will look like in the fall, I'm not sure. Ask me on September 1st what I think about which districts maybe should or shouldn't be open. I sure hope they can be open again.
Now, in closing, Melinda, your foundation has now donated several billions of dollars to health, to science, to climate, to education. And I wonder if you think we're going to see the most meaningful change in the world coming from philanthropy, coming from wealthy people like yourself who can make certain things a priority rather than governments in the future. Is that how the world is going to change?
No, I don't think so. I think what we should expect is that philanthropy can also often take risks. They can try innovations that sometimes work and sometimes fail. They can look for new solutions. They can help us collect the data. But ultimately, it's always up to government to scale up these innovations to create this change. The vaccine for COVID is a perfect example. Those are pharmaceutical companies working with philanthropists and investors, but working with the government. Ultimately, it's billions of dollars from the government that will pull that vaccine through and purchase it for Americans and people in low-income countries. So it's always up to government, but I think philanthropy or private sector and civil society can always help lead the way.
All right, Melinda Gates, we'll continue to follow your work, and we're grateful for the work that you are doing. Thank you so much for joining us today here at Bloomberg. It's wonderful to have you.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
I'm Emily Chang, and welcome to Bloomberg's Front Row. Today I'm talking to Brad Stone. He is the Senior Executive Editor of Global Technology Coverage at Bloomberg News and author of Amazon Unbound, Jeff Bezos and the Invention of a Global Empire. The book chronicles the rise of the e-commerce behemoth and details how it became one of the most powerful and feared players in the global economy.
Amazon right now is a boulder rolling downhill. It is picking up speed. And the idea of anything interrupting that in any kind of significant way that sets back the company, I have a hard time imagining.
We talked about Amazon's exponential growth over the last 10 years, Bezos' biggest moonshots from Alexa to Blue Origin, and we scrutinized Amazon's power as it faces rising competition from everyone from lawmakers to its own workers. Here's my conversation with Brad Stone. This is your second book about Amazon. Your first book, The Everything Store, became an international bestseller, critically acclaimed, won awards. Why did you want to write another book about Amazon and Jeff Bezos?
Simply because it was a good story. The Everything Store covers the first 15 years of Amazon history. It is the idea coming to fruition, Amazon rising to prominence during the dot-com boom, almost dying during the dot-com bust, and then reviving. And incredibly, the creation of value and new businesses and new products has been even more dramatic since then. So 2010, this is a company with a valuation of less than $80 billion, the Kindle company, an online retailer, and today Amazon is a $1.6 trillion company. Amazing.
Exactly. So 10 years ago, Amazon was a $34 billion company. Jeff Bezos was worth about $16 billion.
The guy was impoverished back then.
And I guess I wonder, did you ever think that Amazon and Jeff Bezos himself would get this big?
Definitely not. I mean, the pace of the increase has been startling. Even when I started the book in 2017, Jeff Bezos was maybe the third wealthiest person in the world, and the company was not a $1 trillion company. And so there's something that's really happened in the past few years that I'm writing about in the book, which is about the deepening, the acceleration of Amazon's flywheel, the expansion of its transportation network closer to people's homes, the globalization of the marketplace, and then the success of product categories like Alexa, the Amazon supermarkets, but at the same time, the real cost of this expansion. The world starting to reckon with Amazon's power, and then of course the other piece of the book, Bezos' very public and visible transformation on the world stage into this political figure, source of controversy, source of scandal, and now a retiring CEO.
Well, let's talk about that, because Jeff Bezos has just announced the date that Andy Jassy will take over as CEO, July 5th. This was another shocking development that happened towards the end of your writing process. Why is he stepping back?
Yes and no on it being shocking. The story that I'm telling in the book is a story of a CEO who's taking on so much additional responsibility outside Amazon, whose interests are varying outside Amazon, who has a partner now in Lauren Sanchez, who's bringing him into elite society. They bought this super yacht that I wrote about in the book. He owns the Washington Post. He has a philanthropy. He's got to give away a fortune of now close to $200 billion. I just think that, one, his interests varied well beyond Amazon. And also, he perhaps realized that he's not the right figurehead anymore for Amazon. As this mountain of public attention and scrutiny comes to Amazon, to have the wealthiest person in the world sitting there in the witness chair in front of Congress. Andy Jassy, is a dedicated and successful leader in his own right, but he's also a more humbler target as the leader, the figurehead of Amazon.
Well, and we know that Jeff Bezos trained Andy Jassy. He knows how Bezos leads this company better than anybody else. But inevitably, the company will change under Andy Jassy, don't you think? How will Amazon change?
Well, I would just point out to what's been happening over the past few years at Amazon. And again, this is in the book, with Bezos nurturing the newer projects and coming back for the pandemic a little bit, but really allowing Jassy to run AWS and Jeff Wilke and now Dave Clark to run the retail business, and coming back once or twice a year to audit problems and to look at the operating plan, but allowing, this to run on its own. And in fact, how when you see Bezos in Hollywood or in DC or giving speeches or running HQ2 or appearing on Barry Diller's yacht, I mean, that has been because he's allowed Amazon. So I think it's been a gradual process, and some of the changes have already been felt. And also we should say that he's going to be executive chairman and run it, still nurturing new projects. He says he wants to lead the way in reevaluating Amazon's relationship with its employees. And so it's also a little unclear how fully Bezos will step away. So yes, on changes, but I believe they've been happening and will continue to happen gradually.
There's a question of, can Amazon and Jassy, even if Jeff Bezos is in the chairman role, hang on to the top talent that Jeff Bezos has cultivated over all of these years? Amazon's top ranks are filled with these loyalists who have been there for decades.
I would have agreed, and I probably do agree, that that is one of the biggest challenges. But the idea that Jeff Blackburn, this longtime Amazon loyalist who actually helped Amazon go public as an investment banker, joined the ranks, left, went on sabbatical 2 years ago, and then just came back to run the entertainment division, it's interesting. It may be that the scope of the challenges now for Amazon might help it retain some of that key talent. Look, but it is an important question because the compensation at Amazon is very weighted towards stock. That is a stock price that has steadily increased. A lot of those executives can go and find better opportunities in terms of compensation elsewhere. And so if we do see a protracted period of stagnation in Amazon stock price, you might be right in that Jassy will kind of have his hands full populating the top ranks.
Now, just since you published the book, Blue Origin, his space venture, has announced taking the first human to space in July. Amazon has announced it's buying MGM Studios in a $9 billion deal, and the company was hit with its first major antitrust suit, all in the last few weeks. Would anything surprise you at this point?
None of those really surprised me, but hopefully I can take them each one by one. You know, Blue Origin announced an auction for tickets on a New Shepard space flight. They have been testing this thing for years and years, and they say they will bring test astronauts up in July. They have missed a lot of their benchmarks. I have a very critical chapter about Blue Origin in the book. I think that is still, you know, success there is still up in the air. MGM, I tell the story of Amazon's migration into Hollywood, bringing content to replace two-day shipping as the core benefit of the Prime ecosystem. You know, Amazon is now fighting with Disney and Apple, huge franchises. So MGM for $8.5 billion gives them a vault of James Bond and Rocky and RoboCop and Legally Blonde, these properties that can be redeveloped as franchises.
The book also chronicles so many of Amazon's moonshots, from Amazon Alexa to buying Whole Foods and Jeff Bezos' moonshots, buying the Washington Post, conquering India, developing Amazon Studios from scratch. How many of these ideas were Jeff Bezos himself, started by this, you know, a provocative, I want to do this, versus the Amazon team or people around him who had this idea?
They like to say that it's a decentralized culture with ideas springing from the bottom. As I've, I think, peeled back the layers in this book and in my first Amazon book, it is remarkable how often that there at the center, at the origin, is Bezos with an email to his executives. We should build a $20 computer whose brains are in the cloud, controllable by voice. That was the original email behind Alexa. You know, groceries, there was a senior executive who was pushing that. But, you know, certainly it's Bezos seeing the opportunity, authorizing the investment, and picking the time where a greenfield opportunity turns into a land rush. So it'll be interesting if they can replace that kind of innovation and drive without Bezos really there day to day.
You found, actually, the voice of Alexa, which was quite a coup. Who is Alexa, and where does she, I believe, live?
Right. I don't remember if I mentioned this to you, that I was interested in finding this voice when I set out on this book, but we knew who the voice of Siri was, so I suspected that there was a voice actress, and in fact, her name is Nina Raleigh, and she's a voice actress in Boulder, Colorado, and this was a deep, dark, buried secret for her and for Amazon. And look, I mean, I think it's interesting that these voices are now some of the most ubiquitous, maybe in the history, right, of humanity, and the hundreds of millions of homes where Alexa resides, the Super Bowl commercials where Amazon advertises the Echo every year. And so it was interesting to me to find out, okay, well, who is laboring under an NDA to record what Alexa says every single day?
Now, Amazon Alexa was something that seemed to come out of Jeff's mind, and there were plenty of people who thought it was crazy, including the person that he put on the project. I think it's sort of a great encapsulation of how an idea at Amazon goes from a seed to, wow, this massive product that came out of nowhere. Walk us through that process and how Alexa came to be.
So I talked about that email he sent to executives and just sort of conceiving it, looking for a way to exploit the advantage in cloud computing, sensing that maybe the technology for voice recognition was close. The biggest challenge was something called far-field voice recognition, so not talking into your phone, talking to Siri, but talking across a room, talking to Alexa. And that's a really hard technical problem because of echoes and all sorts of other factors. So essentially, it was Bezos meeting with the team multiple times a week, spending all amounts of money to hire the best people he could, acquiring a couple of companies, and then, in the end, taking Alexa out into the field in total secrecy and hiring contractors to come through these rooms and recite scripts and make open-ended commands, because ultimately these products are only as good as the data that they have at their disposal to continue to get better. And so it's a great example of how the founder, in this case, can kind of push through the bureaucratic barriers at a company and then basically encourage the executives to be unbound in their ambitions and investment to get to a point where this thing was good enough to launch at the end of 2014.
Now, we talked about MGM, which I believe would be Amazon's second biggest acquisition ever. Whole Foods is the biggest, $13.7 billion. And that's actually an idea that, as you write, Jeff Bezos had to be convinced on. What happened there? Has that turned out to be a good acquisition? Because I don't think grocery shopping has been revolutionized quite yet.
Right. Not yet. It's interesting. Amazon was really going slow with grocery delivery. They had Amazon Fresh in Seattle in 2007. Bezos thought that that opportunity would be there, and he was investing in not just Alexa, but smartphones in China and ultimately India. And it was only until Instacart really hit the scene and started to raise money from Sequoia Capital and others, and Google launched Google Express, that I think he recognized that this was becoming more of a land rush. And even then, Amazon kind of stumbled a little bit with Prime Now and Amazon Fresh. In 2017, John Mackey is in trouble with Whole Foods Market, and Amazon makes the acquisition. But I think you raise a good point, which is Amazon's done very little with Whole Foods. I would probably learn from it, but it hasn't turbocharged its growth. The selection on Whole Foods shelves hasn't really changed. They've moved Prime into Whole Foods Market a little bit. But interestingly, the major vector of expansion for Amazon in supermarkets are these Amazon Go stores and Amazon Fresh supermarkets that they're stamping out all over the country. So yes, Amazon's future is in grocery supermarkets and grocery delivery, but it might not actually be a Whole Foods-centric future.
So let's talk then about some of the other moonshots, and that, one which it doesn't seem like such a moonshot now, but it was AWS.
Right.
And that is the unit that grew up under Andy Jassy, which has become such a massive moneymaker for Amazon. Could you see AWS becoming bigger than the e-commerce business, and how much bigger, and when?
I mean, I think if you chart out the numbers and the rate of growth, AWS is currently a $50 billion a year, run rate. It's an extraordinary amount for a 15-year-old business. You'd have to chart it out and see where the lines intersect. But certainly, with AWS growing by leaps and bounds and cloud computing growing so quickly, governments embracing it, universities and companies, Amazon's on track to be not just a dominant retailer, but a dominant enterprise software company. That's extraordinary, and you do wonder if that will be a source of increased antitrust attention as regulators try to figure out, okay, what are the connections between these two giants, and does the fact that retail has AWS and the wholesale rates for its cloud computing needs at its disposal, and the cloud computing division has Amazon Retail as a first and largest customer to get to scale on some of its new services, does that indicate a kind of anti-competitive arrangement? And it's something that the company is going to have to defend in the years ahead.
Now, during your reporting process, something big happened, and it emerged that Jeff Bezos had been having an affair. And it was splashed all over the National Enquirer. I'll never forget you and I trying to find a hard copy of the National Enquirer, which is actually hard to do in San Francisco.
I believe we failed.
we didn't ever find it. In fact, somebody emailed it to us.
Right.
But you write that Jeff Bezos is so meticulously scripted in public, plans his appearances, and in this case, it seemed that he had failed to protect his image. What happened there?
Well, I mean, in some ways, it's a very human story, right? He was somewhat curiously conducting a relationship out in the open, maybe didn't anticipate that there would be tabloid attention. There was. And then there was, of course, this incredible series of events where he wrote a Medium post accusing the National Enquirer of extorting him, basically trying to manipulate him into dropping charges that the Enquirer story was politically motivated. He published that. He insinuated that the whole thing was related to his ownership of the Washington Post, or perhaps the Saudi government's enmity towards him and the Washington Post for the coverage of the Jamal Khashoggi murder. And in the end, it really wasn't. It had much more to do with the brother of Lauren Sanchez, who provided the materials to the National Enquirer. But look, it was this incredible demonstration of Bezos's some unique ability to maybe manipulate the levers of media, at least back then. And what people remember of that is maybe Bezos's stewardship of the Post and his bravery in that situation. And look, he came out. I think the cover of Business Week was "Bezos wins again" for my excerpt of the book, and that's because despite this potential embarrassment, he kind of somehow managed to come out on top again.
Exactly. He manages to cast himself as the victim in this whole affair, and I wonder how much that was aided by the attacks of President Trump, who, because he had bought the Washington Post, took to calling him Jeff Bozo, and Jeff Bezos took the bait and actually fired back a few times at the president, which was a very different strategy than most other business and certainly big tech leaders who tried to be more diplomatic. What did you make of that?
That's right. So I have this scene in the book of Jay Carney, a former member of the Obama administration, kind of pleading with Bezos to not respond to Donald Trump. And I think this is part of the process here, the transformation or metamorphosis that I'm describing in the book of Bezos as a secretive, Amazon-focused technologist to a figure who emerges somewhat bulked up, by the way, on the world stage. And he wants to mix it up with Trump. I think he feels a pride and a defensiveness around the Washington Post and an eagerness to engage. And maybe at the time he thought he was kind of doing something patriotic by contending with this presidential candidate. So, it was pride. It was also maybe a little bit of vanity, of feeling like, he was now taking his turn as the target of this impetuous candidate.
How does the Washington Post, which he and Amazon have claimed is completely separate, completely independent from Amazon, how does that play into the Jeff Bezos empire?
It is independent from Amazon, although there are connections. Mm-hmm. If you're a Prime member, I think you get digital access to the Washington Post. If you're a Kindle Fire tablet owner, you get access and a subscription to an app for the Washington Post. So there are some connections. I think it's helped with the revival of the Washington Post. But what's helped more explicitly is Bezos' time, his attention and focus on building new things at the Post. He didn't open his pocketbook. He made them bring them real budgets, but he allowed them to safely transition from an analog regional business model to a global and very national digital model.
Now, speaking of some of Bezos' other outside projects, we touched on Blue Origin earlier, but you actually go into detail about the relationship between Bezos and Elon Musk, who of course runs SpaceX. They run the companies very differently. Hard to believe that Blue Origin is actually more than 20 years old and now they're just getting to their first human launch. But how is Blue Origin different from SpaceX, and how is Elon Musk different from Jeff Bezos?
It's incredible. In the empire of accomplishment, Blue Origin for Jeff Bezos is kind of, the tarnished jewel, at least right now.
The ugly stepchild?
or let me put it, let me use the metaphor they use. It's the tortoise and not the hare. Okay. He always wanted to go slow. He wanted to constrain the investment. He wanted to keep the team small, and he wanted to move step by step. And so suborbital, or the edge of space, and bringing tourists there was going to be the first step. And then they would get to orbit, and then they would go to the moon. And what happened was the hare came along. Elon comes along, finances it with venture capital, and then government contracts, and gets all the glory, and they do quite well. And I think Bezos, has a fair amount of, I don't know if jealousy is the right word, but curiosity that here Elon is getting paid by the government to launch, and he is still funding Blue Origin to the tune of $1 billion in Amazon stock every year. And so we've seen Bezos accelerate Blue Origin's timetable, its ambitions, its timeline, and seed a little bit of dysfunction over the past few years. And so far, there hasn't been a lot to show for it.
Now, we, of course, debate Amazon's power, whether Amazon is good or bad for the world. And, some folks have said Amazon kept this country, this world running through the pandemic, and yet not without controversy. As you look at the pandemic and how, Amazon delivered and did not, what do you think Amazon got right, and what do you think Amazon got wrong in that critical moment?
I think there was a lot they got right? They kept the fulfillment centers running. They, instituted very quickly precautionary measures in the fulfillment centers. They bet big on COVID-19 testing. And look, they were a lifeline to many families around the world, including mine, in their ability to deliver at a time when there was a lot of anxiety about going to the store. Now, look, there was a lot of criticism, and some of it, I think, quite right, that in the early months, when there was a lot of ambiguity around the safe things to do, and COVID-19 was spreading, right, they brought workers into those fulfillment centers at a time when probably some were exposed. The other thing that I think that they probably really, got wrong, and is a sign of some of the cruelty in the Amazon culture, is when there were whistleblowers or employees who were speaking out about safety, or the climate justice activists inside Amazon who wanted to talk about employee safety, they fired them, right? They just do not brook any internal dissent. Perhaps they're worried that a small spark spreads and leads to unionization. They're absolute allergy at the company. And they fired people who were kind of speaking their piece and their situation. And I think for a lot of people, outsiders as well as Amazon employees, it just didn't feel right.
We had Chris Smalls, actually, an Amazon employee who was speaking out, who had just gotten fired, call into Bloomberg Technology minutes after that had happened, and I remember that moment. And so I wonder, because Amazon tells the story that the vast majority of its workers are paid well, get good benefits, are happy. Then you have Senator Bernie Sanders, beating the drum, saying that is not true. What is the truth?
The truth is complicated, and there's probably not a singular truth. I mean, this is a company now that employs 1.2 million people. You find pockets of discontent and happiness everywhere you go. And in Bessemer, Alabama, unless that verdict is overturned, employees there voted against a unionization attempt. So, look, the life of a worker in any warehouse, and particularly in a fulfillment center, is not easy. They are measured by algorithms. They are sometimes fired by algorithms. The company does a lot of things to ensure that if people are stagnating, they leave, right? They're put on performance improvement plans, or there are no raises after 3 years. And so in some ways, it's not a very empathetic arrangement. But it's, as I said, it's complicated, and there are parts of the world where the economic reality is so dire that actually a $15 an hour wage in an Amazon fulfillment center is a comparatively good occupation. And so, look, I mean, I think there are plenty of ways in which Amazon can improve, and Bezos has finally acknowledged that and says he wants to devote more time to it. And at the same time, probably lots to gain from employees banding together and maybe successfully bargaining collectively.
Well, and it's not just lawmakers, it's not just employees, it's the sellers themselves, which is part of what this new antitrust suit is based on. There's a huge conflict between how, obviously Amazon enables all of these small businesses to reach the world, and yet sellers complain that, they're forced to offer the lowest prices on Amazon, even lower than their own websites. Right. What are the problems that you see? Because you went back and you talked to some sellers who 5 years ago were singing Amazon's praises. Right.
Yeah, let me explain that. So in lieu of an overarching poll that measured the sentiment of Amazon sellers, which it was really hard to do, I thought I will go to all the sellers who Bezos mentioned in his investor letters over the years. And almost to a one, they were really disgruntled by how things had turned out and had moved largely off of Amazon. And I think what that shows is the Amazon frontier, the e-commerce playing field, but in particular Amazon, is almost in turmoil. It's changing all the time. The playing field is increasingly tilted in favor of overseas sellers with lower cost bases, Chinese sellers close to their manufacturers, and it's really hard to compete. And that's a reality, and a bitter one, I think, for a lot of sellers, and one that Amazon, I think, has gone to great lengths to obfuscate in their messaging and in some of their internal marketing to sellers. But look, I mean, you sort of asked about what are the anti-competitive elements there, and I think there are a number of things they do, like the price parity provision that the DC AG is calling out, where Amazon is insisting that sellers sell at a lower price or an equal price on Amazon as elsewhere, that the company's gotten so big that really deserve more attention. Amazon's going to defend it, but look, they could also walk away from it, and it probably doesn't hurt their business all that much.
Well, and you talked about AWS. Do you see other parts of Amazon's business, Amazon's power, that should be scrutinized?
The most challenging thing, and hopefully the thing that the book helps with, is how complex a company this is, how opaque the connections are between the various divisions. I think that some of the things that will get the most attention are the easiest to understand. So we talked about price parity, but also Amazon's stewardship of its private label business. The fact that when you search for batteries, Amazon Basics shows up. instead of the competing brands. Or when you search for nutritional supplements, the ones that Amazon is doing now happen to be the ones that the third-party sellers had the most success with. And this question of whether Amazon is peaking at the vault of data that it has from its platform, utility for other sellers. And so, look, I think that'll be looked at. I think Amazon probably already senses that it's vulnerable and it's probably started to change. But clearly there was behavior in the past that needs to be evaluated in terms of how Amazon has grown some of these new businesses and become such an unstoppable juggernaut.
Do you think Amazon should or will be broken up?
I think the path to a legal breakup, as we saw with Microsoft in the 90s, is years long and probably ineffectual in the end. Because as I said, it's not a traditional monopoly. So I have a dim view of that. As to whether they voluntarily do it at some point, I feel like Bezos was never really into that kind of financial engineering, and the company gets a lot of value by being together. But down the line, as he becomes maybe less of a force there, if outside investors clamor for it, it probably would unlock some value. So I do expect we'll hear more about it.
When everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Kimmy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Bloomberg surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Ferro, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
我们国家是缺乏健康金融系统的风险。
Jack Ma had billions at stake from an impending world-beating Ant Group IPO. Yet, the Alibaba founder cast caution to the side and went straight for the throat.
今天的银行延续的还是当铺思想。
With government officials in the audience, Ma dared to criticize the very Chinese regulatory ecosystem that's allowed his tech empire's largesse, excoriating what he said is an antiquated financial system rife with risk-adverse lending and bad oversight. And within days, Chinese authorities torpedoed the joint mega listing in Hong Kong and Shanghai.
Chinese authorities have abruptly halted Ant Group's mega IPO.
This is really a stunning turn of events.
And unveiled new antitrust regulations that led to a multi-billion-dollar fine for Alibaba and a drastic overhaul of its fintech powerhouse Ant. It's unlikely the speech alone caused such a regulatory reprisal, but it was perhaps ill-advised to be so frank, with the IPO's $35 billion waiting in the wings. Talk about misreading the room.
Final straw, tip of the iceberg, it really backfired.
I think it is a watershed moment for regulating big tech in China.
Jack Ma, always a bit brash.
I never worry about the regulation. Why not? Because I know I'm a good boy.
We always step ahead of the regulators. We have to. Otherwise, we go nowhere.
He at last crossed not only the proverbial, but a new, real red line. Hello and welcome to this Bloomberg Television special, Red Lines, China and Big Tech. I'm Stephen Engel, here at the heart of China's big tech ambitions, Shenzhen behind me and the surrounding Greater Bay region. There's no doubt China's big tech platforms like Alibaba and Tencent are national champions. But as we've seen in the United States with its own big tech companies, there's growing concern that unchecked big tech is perhaps growing too pervasive, too powerful, and therefore too ungovernable. The Chinese government is sending a clear message to its biggest tech platforms. Anti-competitive and financially risky behavior will have consequences. Fresh off slapping Alibaba with a record $2.8 billion fine and announcing Ant Group would be significantly revamped, Chinese regulators warned 34 other internet companies, including Tencent, ByteDance, Baidu, Meituan, Pinduoduo, and JD.com, that they too must rectify their anti-competitive practices, such as, in Alibaba's case, forcing merchants to choose its e-commerce platforms over competitors. Alibaba actually thanked the government for its oversight and promised to comply and move on. Regulators urged the other firms to heed Alibaba's example.
We have experienced this scrutiny, and we're happy to get the matter behind us.
The good news is for Alibaba, the overhang is now removed. So the management, which is in our view very tested, very experienced, now can go back to their normal business.
Like Washington, Beijing has a love-hate relationship with their tech companies, right? On the one hand, these companies represent China's successful modernization. They kind of represent China's growing global competitiveness. And, Beijing can't afford to chop its champions off at the knees. But on the other hand, Beijing has kind of long struggled with how to fit big tech into the socialist market economy.
For sure, the punishment could have been much worse. After all, Alibaba wasn't broken up. It received a one-time, albeit pricey, slap on the wrist, equal to 4% of 2019 domestic revenue, along with a long to-do list to change its anti-competitive ways.
Once a monopoly is formed, it is very hard to reverse it. If you look at what the EU have done, they slashed Google's with almost $8 billion of fine. But, it hasn't really changed the competitive dynamic in the EU market. It hasn't really facilitated new entry.
But the anti-monopoly crackdown is only part of this story. Regulators also want to combat systemic risks from flourishing but under-regulated consumer lending via fintech juggernauts like Ant Group from Alibaba and WeBank from Tencent. Regulators will require Ant to become a financial holding company, effectively to be supervised with the same lending and capital restrictions as a bank, not as a more freewheeling fintech. In China, there's essentially a super app duopoly, Alibaba/Ant, Tencent/WeChat, where Fin meets tech in a big way in the cloud, combining shopping, lending, food delivery, insurance, music, and video, you name it, in convenient one-stop mobile ecosystems. These services are linked by their respective payments platforms, Ant's Alipay and Tencent's Tenpay and WeChat Pay, which together handle nearly 95% of all online purchases in China. Alipay alone claims to have more than 1 billion users, processing more than $17 trillion in transactions a year. Regulators are demanding a more level playing field.
We all know digital finance has made a revolutionary change in China, especially in the areas of financial inclusion. But I think we all would agree that financial transactions should be regulated the same way as all other financial transactions.
While payments contribute about a third of Ant's revenue, its biggest moneymaker is through credit platforms like Huabei, which means just spend, and Jiebei, or just lend, that funnel loans from banks to millions of consumers across Alibaba's many platforms. But Ant funds only 2% of those loans, with the rest underwritten and securitized by the banking partners that want to leverage Ant's massive reach. And that means most of the risk falls to the banks, many of which are state-owned.
Whenever risk is being passed on to the banks, which means that you pass down to the depositors, and in China's case, there's almost an implicit sovereign guarantee of the banking sector. That's a cost that the state almost need to be absorbing.
Authorities will now require Ant to cut off any improper linking of payments with other financial products, including lending, its biggest moneymaker.
Essentially, the tech companies have been arguing that they are different than banks, but they have been behaving like banks, and Chinese regulators are coming in and going, no, you're behaving like banks online, therefore you're going to be regulated like banks offline.
And financial groups, forward restructuring definitely is something that we need to monitor for any potential rating impact on Alibaba.
They got too big for their boots. They had so much money invested. They became competitors to, I think, state banks in China, and were critical of the regulators. This was regarded as lèse-majesté by the Chinese regime, which doesn't want any criticism from anyone.
The call for tightened oversight comes from the very top, with President Xi Jinping warning that Beijing will continue to go after so-called platform companies that have amassed too much data and market power. Bending the knee may be the key to survival. When Tencent found itself possibly in the regulatory crosshairs, management was quick to reassure investors that compliance is our lifeline. All of China's big tech tycoons are now on notice.
I mean, this is the whole ace card of Xi Jinping, right? Is the superior form of governance, this message that the government has changed. So there is this script really that you can no longer just bash government.
The underlying policy tensions have been there for a really long time. So a lot of tensions have been building up in the past 10 years. It just, until this really small event that the whole balance was tipped.
Coming up, we'll explore just how Alibaba and Tencent have grown so large, and how the new regulations could have a big impact on future big tech M&A in China.
A lot of banks don't like us in China. We're not necessarily interested in buying the banks to change it, but because of us chasing them around, they reform.
We're now in the early stages of a sustainability revolution.
The battery problem may
be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
I do everything to promoting the business in China, promoting the business for SME around the world. And the government loves me because, I am helping them to create a business. What is Alibaba.com or Yahoo China? What's it going to be 5 years from now? For Alibaba Group, in the 5 years will be like today, put Google plus eBay in China. In the US, you see food e-commerce, Amazon, Yahoo, Google, whatever. In China, there's only one. You. Alibaba, not me.
Welcome back to this Bloomberg Television special, Red Lines, China and Big Tech. I'm Stephen Engel. The Chinese economy was a much smaller beast when we sat down with Jack Ma a decade and a half ago in 2005. It was a pivotal year of financial transformation in China as the big state-owned banks were being restructured ahead of their mega listings the following year. Things in China were about to get very interesting.
The government in China had the vision. They understood Chinese people are not dumb. They are creative. They are entrepreneurial. So if they give them the opportunity, they will create amazing companies, whether Tencent or Alibaba and Ant and ByteDance, you name it, right?
The heads of older economy, industrial conglomerates, dominated China's rich list in 2005, and yet none of these would even crack the top 400 richest globally. But signs of the impending internet boom were there, with 2 names in the top 10 hailing from technology companies. Fortunes, though, were about to change dramatically. Today, Jack Ma's wealth alone is about double that of the 40 richest in 2005 combined. And Ma's not even the richest in China today. 6 of the top 10 wealthiest on the 2021 Bloomberg China billionaires list are tech tycoons, with at least $25 billion in wealth each.
It's not just 1 or 2. China has a generation of, I would say, world-class companies.
Such as the 3rd member of the so-called BAT, or Baidu, Alibaba, Tencent triumvirate of leading Chinese internet platforms.
I think companies like us, we invest more than 15% of our total revenue every year to do R&D. I think the government like that. And in the meanwhile, I think antitrust is also good for innovation. You just cannot imagine, the number 1 and number 2 guy all of a sudden merge and gaining more than 90% of market share in the US. But that happened quite a few times in China before. That's not good for innovation. So I think that the antitrust push is kind of justified.
One way the BAT biggies grew their girth was by pouring billions into many of China's next-generation tech unicorns, sometimes even cross-investing in the same startups. It obviously further inflated the big platform's offerings, but arguments could be made on both sides whether the M&A closed off or cracked open competition.
When you zoom into one company and you say, well, gee, if the other guys are doing it and if I don't do it, then I am in a competitive disadvantage. So I think some measure to at least make the ground rule clearer, and that would certainly be helpful to us. Us meaning VCs who invest into early stage technology companies. quite frankly, with a goal of using new technologies and new business model to possibly disrupt some of these big companies.
More competition might be helpful to the perception of Alibaba, and that's growing. We see that with Pinduoduo, we see it with JD, we also see it with these streaming sites. That if you have all this traffic on the TikToks of China, including Douyin and Kuaishou, that you actually see a real opportunity for these companies eventually to make a dent in e-commerce. It's not there yet, it's happening, but there is competition on the margin for Alibaba.
It's important to note, many of these investments by Alibaba and Tencent flew under the domestic antitrust radar because nearly all the Chinese companies listed outside of China are done through a VIE structure, or variable interest entity.
For a really long time, antitrust authority did not vet any cases involving a VIE structure for fear of granting it legitimacy.
Right.
Because these had always operated in the legal gray area.
Yeah.
Okay? And as a result of that, you see, the duopoly that you just mentioned, Alibaba and Tencent have made hundreds of acquisitions without making any notification to the antitrust authority. The authority is sending a signal and make it very clear that VIE cases will no longer be exempted. They are going to scrutinize those deals. Although, some may say this might be a little bit too late.
I think the biggest challenge now for the companies there, on one hand, their business model and their practice were developed under the older regulatory regime, which is what was more relaxed. Now they're under closer scrutiny, but there is basically no precedent.
Already, under the new regulatory framework, China's antitrust watchdog has fined Alibaba, Tencent, Didi Chuxing, and Baidu for past acquisitions and investments that were not properly disclosed.
It doesn't mean that we had monopoly practices. The fine was not for that. And I also think it's not right for the government to block every deal, right? Certain kind of liquidity is also good for innovation. You just cannot do monopoly things.
The main query here is, has this firm done anything wrong? Has it trying to exclude competitors? Has it trying to charge consumers super competitive prices? All over the world, antitrust regulators have shared similar concern about big tech. But high market share does not necessarily mean this firm is monopoly.
Their job is to break up monopolies, right?
Bad monopolies.
There's a difference.
Yes.
Monopoly everywhere, if it hinders competition, is bad, right? So it deserves public attention. It deserves government directors to take necessary actions to deal with that.
Has it hindered competition?
Of course, there's a legitimate question as regards the possibility those platforms might abuse their market power, okay? And the tech companies, Alibaba, Tencent, and others, also, and as they get bigger and successful, they have responsibility to behave themselves.
Coming up, how does this cloud of uncertainty change how and where a company like Alibaba chooses to grow, such as in the cloud itself?
At the beginning, nobody cared about data. Later, everybody take care together. Just like last century, at the beginning, nobody take care of the oils. And now later, everybody love the oil. For the oil, they would love to have the wars.
market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
When you go ahead of the regulators, always there's a painful thing. Because they say, hey, wait a minute. My job is to regulate. My job is not about innovation. My job is not to improve the other people's life. That's your job. It's the painful processing that Alibaba is learning.
How have you stayed close to the fire, though, without being burned?
We are very careful. When we're young, it's okay. Now we're big. We probably regulate ourselves much more stricter, much more than the regulators.
Welcome back to this Bloomberg Television special, Red Lines, China and Big Tech. I'm Stephen Engel. Clearly, it's been a delicate high-wire act for the outspoken Jack Ma to stay in the Chinese government's good graces. But when the Ant IPO was suddenly scuppered at the last minute, Jack Ma, the eternal showman, did a disappearing act.
Where is Jack Ma? The Chinese billionaire hasn't been seen in months.
The $600 billion question, where is Jack Ma?
I think when we hear, China billionaire and then the word missing, which was, I think wrong, but I mean, basically, we're used to the script. You've seen other high-profile business leaders fall afoul politically of the government. But so there's a tendency to think it's all going to be in the same bucket. I don't think so.
每年腊八节是我们约定的日子。
Jack has been very good at managing relationship with the government. He once famously said that I'm not marrying the government, I'm dating with the government. He knows how to manage the relationship with the government very well. And I think his remark kind of indicates, his business is quite vulnerable to regulatory attack.
There's a real danger here that in prosecuting an agenda of long-term domestic political control and greater centralization, that in fact you begin to snuff out private sector business confidence.
Our biggest concern is knee-jerk reactions to certain events. So if certain giant fintech companies listing getting pulled suddenly translate into a whole bunch of other events, such as Starboard listing suddenly slows down across the board. And these kind of things do happen in China. And that's the part that really irritates practitioners on the ground.
China's securities regulator reportedly may indeed tighten rules for listing on China's NASDAQ-like star market, with added scrutiny on fintech.
I believe, better oversight does not necessarily choke off growth, unless it's a dumb, stupid regulation, right? Which I don't think that's the case, because I think Chinese regulators are very smart, and in fact, market-friendly.
From an investment standpoint, how does this cloud, or how does it change how you might make an investment in tech now?
Our investment approach hasn't changed. We continue to think, technology can be force for good.
At the end of the day, is the Chinese big tech surge going to be limited because of this?
I don't think so. I think they might even have the potential to grow even bigger and stronger. Because from the government standpoint, it's not in their interest to see their tech companies to become smaller and weaker.
So what leverage does Jack Ma and Pony Ma have?
The leverage lies in their cash rich. They have strong talent pool. They are already very sophisticated in software development.
They have the data.
Yeah.
Which the government probably wants as well.
I wouldn't disagree with that.
A year and a half ago, China released a document codifying data as one of the core socialist factors of production, under the idea that you must have a well-regulated data market in order to maintain economic growth. This is the fundamental core operating principle that China will be using to regulate big tech over the next 10 years. And it's something that really hasn't yet entered into the Western lexicon.
The Chinese government is said to be mulling a state-backed joint venture with the large platforms to oversee how their combined data is managed and shared.
Anti-monopoly alone wouldn't solve the problem. Rather, there should be an agency in China which serves as a champion for the internet sector. In other words, not try to crack down the problems, try to develop the sector.
But pooling data raises a host of privacy issues. Tencent's Pony Ma in a March analyst call conceded that data is extremely complicated. There's a fine line, he says, between ensuring users' privacy and opening up data to sharing. Others, like Baidu, claim to be open to opening their data vaults.
It's very much in line with our belief. We run a lot of open platforms. For autonomous driving, it's Apollo, right? For AI in general, we have Baidu Brain, which is also open. We like openness. We want to share data with other partners.
Giving up one's data surely could upend existing market-leading positions, but non-compliance is perhaps the bigger risk. For Alibaba, getting off with a fine doesn't mean it's in the clear, and that alone surely won't pave the way for an ant-IPO resurrection.
It depends on how the government restructure our regulatory framework in terms of financial technology, and also depends on how the company reacts to the changing regulatory environment.
Which begs the question, how far will the government go in taking on Alibaba and Tencent and all the others?
Of course, they need, the golden eggs laid by these geese, right? They need the innovation, the growth. And they know that if they try and do this all from a state company, it's not going to work.
I'm hopeful. I think as long as the policies and regulations are applied fairly across the board, then I think positive results will come about. Now, if these regulations and policies are applied unevenly, and especially unevenly with certain political agenda behind it, then it could be a different story.
This is a story that has many more chapters to be written, not only in China, but anywhere where governments may feel that big tech has crossed the line. For Bloomberg Television, I'm Stephen Engel. Thanks for watching.